This is Optimal Finance Daily, episode 1163, Pros and Cons of Real Estate Investing by Mike Ballew of Eggstack.com. And I'm Dan, I'm your host, and this is where I read to you from some of the best blogs on personal finance, and I do that every single day, including weekends and holidays. And today's post is a really fresh one, just from a couple of weeks ago from Eggstack.com, so let's get right to it as we continue optimizing your life. Pros and Cons of Real Estate Investing by Mike Ballew of Eggstack.com. Living through the coronavirus has served as a reminder of just how unpredictable life can be. One minute you're driving to work every day and going out to eat anytime you want, and the next you're holed up like some kind of hermit, working from home and suffering through those god-awful Zoom meetings. We like to think life will go on as it has before, but the truth is we have no idea what's around the next bend. We invite you to join us today as we explore the pros and cons of real estate investing. Pro 1. Diversification. Before the financial crisis of 2008, had you ever heard of a credit default swap? Of course not. Who had? Yet this heretofore unknown phenomenon led to an economic collapse second only to the Great Depression. This is where real estate investing comes in. Real estate is tangible, something you can see and touch and feel. Real is even part of its name. Investing in real estate is true diversification. People talk about diversifying their portfolios by shifting some of their investments from consumer goods to utilities or whatever. But what do all their investments have in common? They're stocks. Putting all your eggs in one basket is never a good idea. Real estate investing provides an alternative that allows you to truly diversify. The value of any given property may fluctuate up and down, but the property will always be there. It's not going to disappear into thin air like stocks can do. Remember Enron? Pro number 2, retirement income. The biggest fear among retirees is outliving their retirement savings. With the traditional approach to retirement, there's a constant reminder that it could happen. Every time you withdraw money from your retirement accounts in order to have something to live on, that balance ticks down another notch. Real estate can be a breath of fresh air compared to that approach. It's the gift that keeps on giving. Month after month, year after year, your tenants pay rent. Owning rental property provides a steady stream of retirement income. Pro 3. Asset appreciation. You don't need an advanced degree in economics to understand inflation. It goes up. In my lifetime, I've seen the price of gasoline go from 25 cents a gallon to more than $4 a gallon. Since securing my first professional position right out of college, my salary has experienced a 5-fold increase. The year I was born, my parents purchased the home I grew up in for $16,000. Today, that same home is worth $200,000. Inflation never stops, which is why owning physical assets like real estate can represent your best hope of keeping up. When you go to spend the money you invest in your 401k, it will not buy as much as it does today. In addition to real estate appreciating in value, the income it produces increases as well. In 10 years, that $1,500 monthly rent check you receive will be more like $1,800. Con 1. Ties up capital. Investing in real estate is not all sunshine and rainbows. There are disadvantages too. One is the fact that it ties up a significant amount of capital. Let's look at some numbers. The average 50-year-old has $180,000 in retirement savings. You need 20% down to avoid paying PMI, private mortgage insurance. 20% down on a $200,000 property is $40,000. Throw in some closing costs and improvements, and now you're looking at $50,000. Own 2 rentals, and you're up to $100,000. That's more than half the average 50-year-old's retirement savings. In addition to first costs, there are ongoing costs as well. Your 401k doesn't call you up to tell you it needs a new roof or a new heating or cooling system, nor does it sit vacant between tenants and make you pay the mortgage with no rent coming in. The fact is, in order to play the investment property game, you need lots of upfront money and another $20,000 or so sitting in the bank for unexpected expenses. Con 2. Ties you down. Do you dream of moving to an idyllic location when you retire or roaming the country in an RV? Do you aspire to owning 2 homes, one up north to spend summers and another down south for winters? Do you have grown children you plan to chase around the country in order to remain close to your grandchildren? If so, owning investment property may not be for you. While it's true that there is a way around such obstacles, the solution is something less than ideal. You can enlist the services of a property management company to oversee tenant acquisition and maintenance, which will set you back about 10% of the monthly rent. There's an old adage that says if you want something done right, you have to do it yourself. Can you trust someone else to sift through all the riffraff who would destroy your property and skip out on the rent to find that one quality tenant? Can you trust someone to get the best prices on repairs and not funnel everything to their kickback-paying brother-in-law? Let's face it, being a landlord is risky. Handing over the keys to your property to a total stranger is rolling the dice. That 1 month rent you took as a security deposit won't go very far if they pour cement down the drains. It happens, or more likely ruin the flooring with pets and parties. You are compounding risk when you go the property management route. You are stacking risk upon risk. Con 3. Being a landlord requires work. Owning and operating rental properties is not a passive occupation. It requires time and effort. When you're in the market to buy a property, you have to shop around to get the best deal. It takes time to find quality tenants and oversee maintenance and repairs. If you have a full-time job and a home of your own to maintain and a family who needs you, do you have time to take on something new? What about after you're retired? Sure, you'll have more time, but what if your health fails or that of a family member who needs you to care for them? Conclusion. Investing in real estate is not for everyone. It can diversify your assets, or it can consume them and have the exact opposite effect. It can be the gift that keeps on giving, or it can be a soul-sucking nightmare that makes you want to shoot yourself in the face. Before taking the plunge, it would be wise to tap into other people's experiences. Life is too short to learn everything the hard way. Perhaps you have a family member or friend who's been a landlord. Ask them to share their thoughts. Given the chance, would they do it again? Why or why not? Buy some books or go online and seek guidance. Becoming a real estate investor is a big decision with potentially life-altering consequences. It's not as easy as saying if you don't like it, you can sell it. That's like flushing $10,000 down the drain. It costs money to get into a property and even more to get out of it. In addition to large outlays of cash for closing costs and realtor commissions, there are lesser things that add up. Things such as mortgage payments when the property sits vacant and there's no rent coming in to replace it, the cost of any improvements, and utility connections. Can you afford to throw money away? The $180,000 I mentioned earlier is nowhere near enough to retire on. Ballpark numbers, you need 10 times your annual salary. For most people, that's somewhere around $1 million. If you are considering becoming a real estate investor, sit down with your spouse or significant other and thoroughly discuss the matter. Carefully consider the pros and cons of real estate investing before making any big decisions. You just listened to the post titled Pros and Cons of Real Estate Investing by Mike Ballew of Eggstack.com. And that should do it for today. Hope you have a great rest of your day, and I'll see you back here tomorrow for the Sunday show, where I will have a post from FlexSense about your 401k and where your optimal life awaits.